What would the evil twin to Warren Buffett use to analyze a stock? Well, that method actually exists, and that is what we're going to talk about in today's video. And the reason I say this is because the stuff that we're going to talk about would be borderline sacrilegious to Warren Buffett. And that is because Warren Buffett believes that we should never try to time the market. What does this mean? Well, it means investing something not because of what it is worth, but because of what will happen in the near future. Hence, we're using timing to make investment decisions. Kind of like timing the jump to land on the train that is going in the direction you want, instead of looking up the ticket, the destination, and the journey length like Buffett would. So if Warren Buffett had a rebellious twin brother, he would probably use the following to invest in companies. But if we combine Warren Buffett and his alter ego together, we may be able to come up with a very powerful way to invest. So what is this alter ego, this evil twin that we are talking about? Well, it's known as technical analysis, and it is what we're going to cover in depth in this video. This is day 12 of 100 Days of Finance, where the entire goal is to give you more personal finance education in 100 days than most people receive in their entire lifetime. As always, my name is Derek, and I got my degree in finance, so you don't have to. Let's get right back to the video. So, what is technical analysis? Well, it's the method of analyzing stocks or assets by analyzing statistical trends and charts of past activity, as opposed to fundamental analysis, which looks at the health of a company. Technical analysis involves examining stock charts and historical prices to identify patterns, trends, or prices of interest where a stock might break through. Now, why would anyone do this? Well, one of the main principles of technical analysis is that market trends tend to repeat themselves over time. This means that patterns that have occurred in the past may repeat themselves in the future, providing us with insights to potential price movements. Now, at first, you might say past performance is not indicative of future results. And in a sense, you'd be right. But in a sense, you'd also be dead wrong. If one takes the time to go back through history, one is quick to realize that we humans are creatures of habit and instinct. And us humans tend to react the same when put in similar situations time and time again. So with that understanding, let's go for an example. Stock A is trading at $99, and in the past, every single time it gets to $99, it struggles to get over that amount. And this has happened, let's say, 10 times over the last year. This alone is a very simple example. But even in this very simple example, the data tells us one of two things is very likely. If stock A cannot break through 100, then it is likely to fall in the near future. But if stock A does break through 100, there's probably a good chance that it will continue due to momentum and FOMO. Now, one of these two events will most likely happen regardless of the intrinsic value of that stock, because people are inherently emotionally driven and will act similar in similar situations. So that alone is powerful, but I believe when we combine it with fundamental analysis, we can create something quite amazing. What if in that same scenario, fundamental analysis told us that the company had an intrinsic value of $143? Now, with both types of analysis on your side, would you be more confident in purchasing that stock the moment it crossed the $100 level? There you go. So most people will tell you not to time the market. And for the average person who's just trying to plug away at their Roth IRA, that is good advice. But if you are watching this video, then perhaps you are not just the average person. And perhaps you want to try and beat the historical average of the S&P 500. In that scenario, fundamental and technical analysis both have their place as tools to use for that job. Now, technical analysis is a huge field with many different aspects, strategies, indicators, etc. And we will be going over them in future videos in this series of 100 Days of Finance. So make sure to subscribe if you haven't already, and make sure to turn on the bell notification so you don't miss those future videos. Now in tomorrow's video, we're going to switch gears just a bit, and we're going to cover what affiliate marketing is and how you can use it to make money. And then on Thursday and Friday, we will return to the world of personal finance and investing as we continue our journey of 100 Days of Finance. Again, my name is Derek, and I got my degree in finance, so you don't have to. I hope this video was a fun and enlightening introduction into technical analysis. I love this stuff. It's been my passion for over a decade, and I love to be able to share that with you. I'll see you tomorrow.